This is a recap for the Euro Runner and ES Runner trading systems for Monday, June the 25th, 2012. The profit times are going to be broken up into two parts of the day to make things easier for traders to ascertain what profitability is during times of the day which is maybe best suited for their schedule. The ES trade profit will be taken from pre-market 3 a.m. to 9:30 a.m. Eastern Standard Time, the start of the European cash market open, through to the U.S. cash market open at 9:30, and then profits will be taken from 9:30 through to 4:15 p.m. for the U.S. trading session. For the Euro, it'll be from 2 a.m. till 7 a.m. and then from 7 a.m. until 12 p.m. Those are your best two times to trade the Euro. The 7 a.m. is typically when lunch takes place for European and London trading desk, where volume will typically fall off and price action will also not be as explosive, and it's a good time to separate the times of the day to trade the Euro. So I hope that'll help everybody looking at the videos going forward. I'm going to go back in time and do that for the previous 2 months worth of trades, but going forward that's what we'll be using. So to go forward here, I advise traders to stay out of the first 15 minutes of the market's open, to look for a trade from 3:15 and on for the European cash market open, because it can be more volatile during that time. Some days makes for great trades, other days makes for some choppy volatility. Monday morning things tend to get going a little bit slower, but we're going to use 3 o'clock again going forward. This trade here happens at 3:15, which is right at the time you want to look for a trade. This previous couple of candles here in the European session for the first 10 minutes weren't very big, huge, volatile candles, which is a safe sign. Typically the market is not extremely volatile. If you get the first couple of candles in the European market open and they should shoot down and shoot up 3-4 points, that's dangerous. My suggestion is stay away from that entry. That first 15 minutes is critical, and if you get some very erratic price action, it's better suited to stay out of the first 15 minutes when you see very violent price action like that up and down. This trade instead at 3:15 is the 3:15 time frame we're looking to take trades at, and the price action beforehand was very safe and reasonable. So the first trade here makes 6 ticks on the short. It's a primary entry with an R printed for a qualified rookie trade. You take 2 contracts or more, but you take half your position out at 6 ticks of profit. You bring the second to break even, and you let it run down until either a cross of the white line or the 9:30 open. In this case here, it was able to run down and down and down. Nearly got stopped out, but it was able to run all the way down here to this point here before you would exit it at 9:25 in the morning, a few minutes before the 9:30 opens. That is the rule for taking profit on a runner, to exit before a market open, a market close, or a cross of the white line, or when 2 opposite direction triangles. If you're in a short, those would be green triangles. In the future going forward, the next couple of days, it'll show up as cautionary triangles in the color yellow. If 2 yellow triangles, in this case today 2 green triangles, were to form within 10 bars of each other, that would be another reason to exit a runner. But that didn't occur here. So your exit rules for a runner are one of 3 things: stop loss being crossed line, the stop loss line being crossed before the market opens or closes, and last one is if 2 cautionary opposite direction, contrary directional triangles were to appear within 10 bars. That's a very good exit strategy. Captures a lot of profit on a runner. You had a sprint trade that came in right here after 10 periods of the stop loss line going flat. The first turn down right here with the first the first triangle was a sprint. That trade made about 6 ticks. We're looking for 8 though, so it didn't make the 6. It's exited at the first cautionary contrary directional triangle, which again going forward will be a yellow. Right now it's green, for a 4-tick profit. And then going down here, as you can see, this exit here from the entry price back up here, 1900 was your entry price. That exit here was a runner of 15 ticks. So the pre-market hours yielded 25 ticks of profit. 6 plus 4 plus 15 is 25 ticks, or 6.25 points. Going forward now at 9:30, we switch to the 2-minute system. Go back and scroll to 9:30. At 9:30, we take the first 15 minutes as rookie trading rules. We don't trade between 9:30 and 9:45, so these scalps weren't valid to take. First valid scalp here is a 2. It's an actual sprint trade because the period is at least 15 bars on the 2 minutes we're looking for, where the flat line is smart line is flat, and it's 10 periods on the smart line being flat for the pre-market. First turn down qualifies as a scalp. In the next couple of days, this will actually appear as a purple S when this occurs. To make it easier for traders to see when a scalp occurs, it'll be an audio alert. It'll say not a scalp, excuse me. When a sprint occurs, it'll be an audio alert that says sprint, and it'll show up with a purple S here and a purple S down here. So this trade is a sprint. We look to make 10 ticks of profit in the regular trade in hours. It made 7 down here, came back up, was down about 2 or 3 ticks, and then got exited here at the first cautionary contrary directional triangle for a total of 2 ticks of profit. This scalp here was a valid scalp to take. Unfortunately, we went up against 20 points of daily range, which is a very critical technical level. I told a lot of traders to not take this trade because of going up against 20 points of technical range, but several still did because it was a valid trade based on rules. It lost 8 ticks. Technical levels like that can usually create a lot of a bounce, and a lot of times you need a bigger stop loss to deal with that. But nevertheless, this is a losing trade here. Going forward, this scalp was the one that I told the room to take, because even though it wasn't beyond the yellow line, even though it didn't print as a blue rookie trade scalp, it was a scalp that had 5 ticks of room to work with until the yellow line. So I told the room to take the trade, move the break even, move their stop loss to break even once you hit the yellow line, in case the yellow line causes a real big bounce. Otherwise, move your stop loss to break even and ride this thing down for 2 points of profit if you can. It was for the more advanced trader having to look at the yellow line. It wasn't beyond the yellow line, which is the safest scalp. It was inside the yellow line, but it was also 5 ticks away, which gave you a lot of room, a lot of buffer zone to work with. A lot of traders took this trade and made 8 ticks, 2 points, but I can't count it as a trade. This trade here is a cautionary trade. It made 8 ticks from the chase price here. This first scalp here was entered here. Went up about 6 ticks, came down, was down about 2 ticks, ended up getting exited at the first cautionary triangle here for a total of 4 ticks of profit. The next scalp got entered here, got exited at the open price of the cautionary triangle for a negative 3 ticks. And then we had a 4 tick, a trade that made 4 ticks from entry to exit. The exit here would have been the first cautionary. Actually, let me move that over, sorry. The first cautionary triangle, which appears after 5 periods of the stop loss line being flat, and that exit was right there for a total of 4 ticks from entry down to this price point. 2 contracts at 4 ticks would be a total of 8 ticks on this trade. The next trade here was entered here at 13.07 quarter. Exited when the first cautionary triangle came up here after 5 periods of the stop loss line being flat. The difference with these 2 trades, though, by using the SSI, is during these 5 periods of the stop loss line being flat, the smart line being flat, you had no positive compensating factor in the way of a down arrow on the SSI. Every reason to exit this trade right here. This trade was different. It still counted as only a 4-tick winner, but going forward using the SSI, we're going to modify the rules to capture more of these moves to make more profit, because during these 5 periods of the stop loss line being flat, you had a compensating factor. You had an arrow come in here on the buy side, which can help to mitigate the fact that the stop loss line went flat. It tells you that buyers did come in a large way during these 5 periods. It happened on 1 candle, but that's better than happening on no candles during this period here. Okay, if you look through here, again, there was no arrows that came in. That arrow only formed at the end of this candle, whereas at the beginning of this candle is when the triangle came in. So when the beginning of this candle formed and this triangle came in, you had no down arrow during this period. Where here, when the triangle came in on the first tick of this bar, you did have during these 5 periods a compensating arrow. So going forward, this can make trades. It can keep trades longer when you have a compensating factor. Now that we're using the SSI, these are the same algorithms which the additional set which professional firms use on top of these main set up here. So that trade here, by staying in it, would have actually made the 2 points of profit right here, but instead I had the traders leave this trade at 4 ticks of profit because we're not using this yet as a rule. We are probably soon to, but just not yet. And then a scalp came in here, entry, exit on the first cautionary triangle, and that's for 1 tick loss. A scalp came in here, right there, exit on the first cautionary triangle for also a 1 tick loss. And you exit on scalps with the cautionary triangle when that appears after 5 periods of the stop loss line being flat, because this is what usually happens after a cautionary triangle comes in, this huge price correction. So the total for the regular trading session was 17 ticks. When you add up all of these ticks, 17 ticks against 1 contract traded, or however many contracts you want to trade, for a total of 4.25 points. Now to jump over to the euro real quick. The euro had a choppy day. Had a nice move that started, but this move started way back at 12:30 in the morning, which no one will be taking this trade. So we've got to count only the scalp trades. Scalp taken here, exit at the cautionary triangle. Scalp taken here, almost makes the 15 ticks, but just misses it. Exit at the cautionary triangle for a break even. Scalp taken here on the first sprint trade after 10 periods of the stop loss line being flat. That's a sprint. Actually should say sprint. So let me do that. Euro sprint trade. I'll just go ahead and modify that. And then this one here was another valid scalp. Taking out the first cautionary triangle was a -3 pips here. This went up against it about 10. So the 7 a.m. to 2 a.m. to 7 a.m. time was a -8 pips. And 7 a.m. to 12 p.m. was a -1 pip. You had a scalp here at 7 to 10 in the morning, which by the way I think is a terrible time to trade between 7 and 8 in the morning. I'll probably use profit going forward using 8 o'clock, because 7 o'clock to 8 o'clock in the morning Eastern Standard Time is when European and London banks are having lunch. Just not a good time to trade Forex. Right here we have 2 pips of profit made here when the first cautionary triangle came in. Right there. Again, you had no compensating factors during this 5 periods. You had no up arrows, long arrows coming in to compensate for this smart line being flat. So you have 2 pips taken out of profit here on 1 contract. It's a cautionary trade because the previous trade moved over 50 pips. And this trade here was a short, exiting it though at 12 o'clock. Exit short here was at about 11:15 in the morning at a price of 78. Right there. And then exit here at 12 o'clock, which would be a total of 1 pip of profit on 2 contracts, or twice your normal position size. Your position size might be, let's say, 2 lots or 2 minis or whatever. You would take half of that on a cautionary trade. So that's why there's a times 1. A times 1 for scalps is because you're taking half of your normal position size. On a primary trade, you take your normal position size. That's why it's times 2. So -1 on the euro between 7 a.m. and 12 p.m. This is now the 8th day in 48 days the euro is lost. It's averaged 40 pips per day for the last 48 days. This is the 8th day. Friday was a losing day. Today was a losing day. But Thursday made over 200 pips. And last week still had a net for the euro that was ahead by about 120 pips last week. So Monday for the euro, very choppy. The range never got above about 84 pips for the day. So it was a very choppy day for the euro. But even during a choppy day, we only lost 9 pips. So it really wasn't that bad. Thank you all very much. I hope to see you all in the room in the next week for a trial. For those of you watching the video that aren't trial members, please come in the room and see these extremely sophisticated, very successful, highly profitable, and with a success rate of over 85% for the last 2 months. Come see these systems live, understand why professional trading firms use them, understand why I have a retention rate of members in the room that is over 80%, and understand why so many traders are doing very well with these systems. They have a high success rate, consistent profitability for both the ES runner and Euro runner, and going forward in the next couple of months, we will be applying these algorithms to other futures, such as the Russell, gold, oil, and the 6E, which is the Euro futures market. And we also have the Euro runner applied to other currency pairs like the Aussie and the CAD, which do extremely well with these systems and make a lot of profitability during the Asian trading hours as well as the Canadian trading hours for the CAD. I look forward to seeing you in the room. Thanks very much for your time. Please email me with any questions, at info@es-runner.com. Thanks very much.